Thank you for checking out Film and Roll Up and Associates Municipal Market Update for the week of September 21st, 2020. My name is Adam Bauer. I serve as CEO and President of Film and Roll Up and Associates. Film and Roll Up and Associates is a municipal advisor to government. 2 weeks ago, I took a significant amount of time to walk through defined terms and how different data points have historically compared to each other. I'm going to be a bit briefer this week and just kind of walk through a few updates. A lot has not changed since we last spoke, but there are some things developing that I think we should all keep an eye on. On this slide, we're showing historical MMD yield curve and the range that it's traded at for years 1 through 30. The line looks very similar than it did 2 weeks ago. What I told you 2 weeks ago, this is a bit steeper than it's been over the last several months. So investors are requiring a little bit more yield for longer term debt than they have been the last few months. On this slide, what we're doing is we're comparing the 10-year US Treasury to the 10-year MMD. And if you'll notice that 10-year MMD is over the Treasury again, this is a sign that even though we were getting it to the point where the Treasury had just a slight yield higher than the MMD, and that would be the more traditional trend, that didn't last very long. And once again, investors said we would prefer the treasuries over the municipals, even though you get a double tax exemption on municipals where you don't get that with the treasuries. With the treasuries, you still, the states can't charge taxes, but the Fed still charges taxes on the interest there. So you can see, once again, I think investors are trying to avoid some risk. And I'm going to talk about another data point that would also suggest that in a moment. Here we go. This is the inflows and outflows of municipal bond funds. And you're probably tired of hearing me talk about this one because I spend so much time on it. At first glance, there's nothing to report here. There's a green line, money's flowing in, everything should be looking good. But on Thursday on Bloomberg TV, they reported that the last 3 weeks have had outflows from the unrated funds, which is in direct contrast to some of the deals getting done in California, where you have some deals getting done with no development at all. So when I say no development, no actual homes constructed to date. And so in one case, you have investors still buying something that is a little bit riskier than they've historically bought. But as a larger group, you're seeing not as much money flow in, or actually money flowing out of the unrated municipal bond funds. And so that's something we should watch, because that would likely be the first place that investors would say they're getting a little more nervous about municipal credits. And so that's something we should talk about again in 2 weeks, and we'll continue to monitor that. But as a whole, monies continue to flow into the municipal bond funds. Volume continues to be high, and that's what this chart shows. That green line just seems like it continues to drift away from the tan and the red lines. And when I say lines, I mean the dotted lines there. And what's happening here is a lot of issuers are seeing how low rates have been. Also, there's a lot of talk about getting into the market before election. We have two candidates that have very different views on how the country should be managed. And so you could imagine, and we all see, the uncertainty that we're feeling and what's next. Is we don't know who's going to win that election, and that presents uncertainty to investors. And so municipalities are saying, let's get our bonds priced in this market as quickly as we can to avoid some of that possible uncertainty as the election gets closer and closer. This line was particularly interesting when we spoke 2 weeks ago because it had a bit of a spike towards the end of it. And then we actually did a breakout graph then to show you how that has increased pretty dramatically over a short period of time. But it's really tapered off since then. So didn't feel a need to show another breakout chart here, but you can see how that's changed over time and really been relatively level since the last time we spoke. Upcoming economic things to watch here. Over the next 2 weeks, you can see some pretty significant ones. Those home sales seem to be pretty important to watch. If you listen to the news, it seems like home sales are performing very well, but you have quite a bit to monitor there. I think unemployment is also one that we all have to continue to watch very closely. Finally, as we wrap up, we have our Film and Roll App and Associates registered municipal advisors. Encourage you to reach out to any of them and ask any one of them for more data on any things I discussed. And look forward to hopefully talking with you again in 2 weeks. Thank you for taking the time.